Good evening, Eddie C here. It's Sunday, 23rd of October. Uh, the time is 9:21 p.m. I want to take a look at this particular stock, Malaysian Building Society Berhad. Stock code is 1171. I like to explore to see if Malaysian Building Society is a good future potential for consideration. I'll use the 10 rationale to uh, present the case, and let's see how the outcome will be. First, let's look at the fundamental side. From the fundamental side, normally I like to compare the intrinsic value against the current market price. The current market price of MBSB is 57 cent. Okay, let's now calculate the intrinsic value. Okay, to calculate the intrinsic value, we use the enterprise value divided by the total number of shares outstanding. Okay, the enterprise value is 17190 divided by total common shares outstanding is 7171 billion. Okay. And the intrinsic value is 2 ringgit and 40 cent against the market price of 57 cent. So 2 ringgit 40 cent minus 57 cent. So we are buying at a discount of 1 ringgit and 83 cent. In terms of percentage, what's the discount? So 183 divided by 57 cent. We are talking a discount of 320%. Can you believe that? All right. The second consideration fundamentally is to calculate the doubling up, and to do that we use the rule of 72. 72 divide by operating margin 63%. Okay, looks like it takes slightly above 1 year, 13 months for MBSB to double up its price from 57 cent to 1 ringgit and 14 cent. It takes only 1.15 years. So you can roughly say that this is basically a short term. We take it as a short term investment for doubling up. The third consideration is the payback period. Because MBSB is a financial institution, so I cannot use the acquirer's multiple, that is the enterprise value divided by the EBITDA, because financial institutions do not report this figure. So we can only use the PE ratio. In this case, MBSB PE ratio is 24 times. So looks like it takes 24 years for the payback to occur. So it looks like the growth factor of MBSB currently is quite poor. Okay, but MBSB has been paying a dividend yield of 5.61%. Okay, it has a free cash flow for sustainability of the business. So looks like it's not going to get bankrupt anytime now. It has a free cash flow of above 1 billion, 1.077 billion. but it has a net debt of 13.414 billion. All right, no bad debt. Okay, the only comforting thing I like to add here is earlier I posted an article saying that Malaysia Building Society is acquiring MIDF. Uh, and MIDF sits on interest free loan from Japan during Dr. Mahathir's Look East policy, and they have USD US dollar 700 million sitting in its coffer. Okay, so US 700 million times, let's say five, 3.2 billion ringgit. If this is offset against the net debt, it will reduce the net debt quite a bit. Okay, then it will have even greater free cash flow if the merger does actually become evident. Okay, let's now take a look at the chart, technical charting. We want to know when exactly will be the good time to consider a purchase. First, of course, we would like to know if a trend has formed. Definitely, a trend has formed because it has already occurred a higher low here. Okay, uh, there is a early trend forming, but has not been confirmed yet. And momentum wise, Malaysian Building Society is not ready yet. Okay, because the price action or the price candlestick is still below the cloud, and it is still below the two MA233 line and also below the MA155 line. Okay, so to to be sure to time your purchase, you will have to allow the price action to climb above the cloud and the MA233 and the MA155 line. All right. And then when it hits the first Elio wave apex 1, Elio wave 1 apex, and there is going to be a correction, a pullback correction. Okay. And uh, at this breakout line of let's say about 61 cent, if a pullback occurs, let's say 62 cent, if a pullback occurs, all right, then maybe this is probably a buy entry. So the strategy is pullback rebound at 62 cent. That is the time when Malaysian Building Society will be ready for purchase consideration. Okay. Okay, let's look at that is managing risk. Number one, improving our probability of winning, and number two, to further improve our risk management, we need to know what's the price to buy. Say just now I say around 62 cent. 62 cent. Okay. 62 cent. All right. 62 cent. Uh, and we have a target price of 82 cent. Okay. With a stop loss, if you look at this long candlestick, volatility, I'm measuring the volatility now of about 4.7 cent. Okay, So let's set our stop loss also based on the last volatility at also 4.7 cent. Okay, 4.7 cent. So if we set a stop loss at 57 cent against our target price of 82 cent, we will have a reward to risk ratio of 4.3 times. Is that good? It's good, isn't it? And lastly, uh, at this price action, MBSB is actually riding on wave 3, the beginning of wave 3. So that gives you a good range of upward momentum if we do achieve this price target of 82 cent. So I presented to you the 10 rationale. So think about it and you decide if this is actually a good consideration for you. Thank you and good night.